If you are living in USA and want to buy a primary residence using financing and don't know where to start, you are not alone. In 2024, there were 24% home buyers were first-time owners, according to National Real Estate Association of Realtors. High home prices, rising interest rate, and limited inventory have made the process more difficult for the first-time home buyers. And there was not enough resources to figure out how to get the mortgage approval as easy as possible online. So in this video, I will explain how you can get your mortgage loan in 4 easy steps. Hello homebuyers, my name is Imran, in case we haven't met before. I am an experienced real estate investor and also a licensed real estate agent in the state of Nebraska. I have applied to 35 different mortgages in the last 9 years to buy single family homes, and I have an approval rate of 98%. If you appreciate the content I'm making, hit the like button and share with your friends. There are 4 different steps in the mortgage loan processing. In the first step, you will talk to your loan officer to get a pre-approval. In this step, you need to submit all the income related information and also credit score to the loan officer. You need to collect all the following documents when you are submitting applications to get pre-approval. For the case of income documents, you need to submit at least last 30 days of pay stub, last 2 years of federal tax return, and also last 2 years of W-2s. For the assets and reserve requirement, you need to submit last 2 months statements from all the banks and also any brokerage account you might have. For the reserve requirement, you can submit all the 401k or retirement account balance to the loan officer. For the identity document, you need to submit your copy of your driver license or any birth certificate, and also last 2 years of residence history. And if you were renting before, you need to submit the property management company contact information. If everything looks good to the loan officer, they will send you a pre-approval letter where they will specifically mention how much mortgage you will be get approved for the loan process. Let's talk about step number 2, processing. In this step, you basically work with the processor to get your loan approved. So after the pre-approval process, you will work with your realtor to submit offers to purchase your next home. When your offer gets accepted, you work with your processor to submit all the relevant information for final processing. You need to submit a uniform loan application form to the lender. In this step, your loan processor will collect any additional documents to make the process as smooth as possible for it. After the loan processor submitted all the information for processing, the loan goes to the underwriting step. In this step, there is a person who is called underwriter, looks into all of the required information or documents you submitted, and also finally approves the loan. The underwriter might ask for additional verification documents based on the income and also the reserve requirement. Couple of the items you should be familiar in this step, like debt to income ratio, like DTI, and also principal, interest, tax, and insurance, which is in short form called EP. If you want to get the best rate for the mortgage, your credit score needs to be more than 720, that you can still get approved for more than 620. Most of the lender typically allows for DTI more than 43 for the first-time home buyers. For the reserve requirement, they typically look for 6 months of PT in your retirement account or also any of the savings account. You will need to be very careful when you are in the underwriting step, because there are a few things you should or shouldn't do during this step which can jeopardize your whole loan application process. Let's talk about all the do's. You need to keep your job when you are in the underwriting process. You need to pay all the bills on time, and also you need to keep track of all the paper trail of transaction you are making. Let's talk about the don't. You should not change your employment during this process. You shouldn't apply for new credit like buying a new vehicle or actually any large purchases using credit card. You should not make any large deposit to the bank using obviously cash deposit. You shouldn't amend your tax return or change residence. And Obviously, you should not spend money from your reserve account. After the underwriting process, the loan application goes to the last step of the processing. It's called clear to close. When you receive clear to close for your loan processing, you will work with your loan processor again and also your realtor to get closer to your closing date. Finally, you sign all the relevant documents during closing. Congratulations, you have been approved to buy a house using financing. If you like this content, you might also like my other video where I explained how you can make passive income using rental property. Good luck with the mortgage approval process and consider subscribing if you are new to this channel. Thanks for watching.